It's 12:32 as the noon business hour continues. Markets are mixed today. We're joined by Jim Holtzman, president and CEO of Legend Financial Advisors in Pittsburgh. You can follow him on X, the former Twitter, at James Holtzman. Jim, thanks for joining us today. And have traders worked out all of their interest rate anxiety, or is that still weighing on the markets today?
I think it's still weighing on the markets. I think the markets were surprised by some of the comments from the Federal Reserve. So I think they're still trying to digest the information.
Now, at the same time, I think, the idea that there was going to be a rate cut in March seemed optimistic even back when that possibility was floated back in December. And every economic report since then that surprised to the upside seemed to throw cold water on that before Chairman Powell officially threw cold water on that on 60 Minutes on Sunday.
Yeah, exactly. And I think it started out by the expectation of Fed rate cuts maybe later in the year in the fourth quarter, and then all of a sudden it moved up to March. And it does seem like it kind of jumped the gun too soon.
And then when it comes to market movers today, it seems like the biggies have all reported. We got all the big information out of the way. A lot of the tech companies have posted their fourth quarter earnings, their guidance for 2024. What are some of the stocks that are on your radar today?
Well, I think just watching some of the Magnificent Seven stocks always seem to be at the front of the headlines. They're driving so much of the markets right now that you have to pay attention to that, because that really interprets the overall health of the markets, because the Magnificent Seven's making up about 40% of the return so far this year on the S&P 500. So those ones are really watch in terms of where the market is heading.
And it seems like inside that Magnificent Seven, you have a super duper four, exemplary four. We'll workshop a name for it, but Amazon, Meta, Microsoft, and NVIDIA accounting for 3/4 of the S&P's total return for 24 so far.
It's surprising coming out of last year where the numbers were so high as well. For those four stocks, or even the Magnificent Seven overall, it was about 60% of the return from last year. So it's a little bit more of the same at this point.
And then where does history come in? Because you would see these pieces of analysis that say historically, this month in this year is always weak no matter what. And it seems historically February in an election year, for whatever reason, tends to be kind of soft. And is that showing up so far?
I think it is. And I think, with the interest rate, the news with the interest rates not getting cut in March, that being committed, I think that's going to further calm some of that eventually. But it's going to take a few more days for the markets to digest it.
And then when just talking about the interest rate environment, it seems like we swing back and forth between what is good as far as interest rates are concerned and what is bad as far as interest rates are concerned. What is an interest rate cut that is good news, and what is an interest rate cut that would be bad news? Obviously, an interest rate cut in response to rapidly deteriorating economic conditions would be bad. But it seems like in this situation, the reason why a cut gets pushed into the future is that the economy is stronger than most people anticipated.
That's exactly right. And it's counterintuitive when you first hear that news, but that's exactly how it works. And that's traditionally been the case.
Jim Holtzman, president and CEO of Legend Financial Advisors in Pittsburgh. Thank you for joining us today. Get more of his thoughts on Twitter or X at James Holtzman. Coming up next in Travel Tuesday, tips for planning a destination wedding. It's 12:36.